Well, chipmaker NVIDIA falling today on a Wall Street Journal report that the U.S. is considering new restrictions on AI chip exports to China. We're looking at losses of just shy of 2%. Well, NVIDIA stock has certainly been riding the AI wave since the start of the year, hitting $1 trillion in market value last month. So what does the U.S. crackdown on China mean for tech and tech innovators? Joining us now for this week's ETF report, brought to you by Invesco QQQ, we want to bring in John Porter. He's the Chief Investment Officer and Head of Equity for Newton Investment Management, a BNY Mellon investment firm. He's also Portfolio Manager for BNY Mellon's Innovators ETF. John, it's good to see you here. So lots of focus on the news today for NVIDIA and what exactly this means for tech innovation in the U.S. Since you're a portfolio manager of your tech innovators, or your innovators ETF, how are you looking at this from a portfolio management perspective?
Absolutely. And if there's any animals in the background, please let me know, because there shouldn't be any. I think this is every day there's headlines that you need to consume. And this is certainly news that we have to analyze. And there's obviously a lot of political cross currents between the United States and China. And China is an important market for NVIDIA. We can't ignore that. It's somewhere approaching 20% of their revenues. But I think right now, the news that there may be additional crackdowns on China is largely a non-event for the NVIDIA P&L right now. Demand for NVIDIA chips is so strong right now. There's such a backlog of companies that are desperate to get their chips, which are the key building block to build out AI capabilities. I really don't think this news is material for NVIDIA.
And let me ask you then, just maybe looking a little bit further into the future and just acknowledging the fact that this AI bubble is in a nascent stage and we tend to see these things come in waves. I'm reminded by the Bitcoin and the blockchain revolution, particularly late 2017, early 2018, when Bitcoin finally rose to 20,000. There was all kinds of excitement about that too. And NVIDIA was actually building up their chip inventory. They got caught with a glut. I know we're not at that phase yet, but do you see us approaching a phase where we're really, the chip market could be a pawn in the AI bubble?
Jared, that's always a question that investors have to ask themselves, particularly with regards to tech. There's always a hype cycle that can get well ahead of the business realities. And I like to compare and contrast this like you did to Bitcoin, cryptocurrency, the metaverse, and other things. I think the difference here is the use case is clear. I think in the early days, and maybe even still currently for cryptocurrency and to some extent the metaverse, the use case is still trying to be explained. The use case for AI is very clear. You're not having to convince governments or corporate America how AI can help improve the productivity of their businesses, of their endeavors. So I think that's one of the major differences here.
John, how are you looking at valuations overall? Because it's not just NVIDIA. Alphabet, I believe, is also one of your top holdings. Has had a big run up since the start of the year. Any concerns in terms of the valuations and what exactly that could look like for some of those top holdings that you have?
Absolutely. You always have to be mindful of valuation. And you talk about the hype cycle. You need to weigh sort of where the equities are priced relative to what the business potential is. NVIDIA is an interesting one to look at. It's trading at somewhere around 45 to 50 times consensus earnings, which is well above average for the market. But considering their growth rates, considering how they're a critical building block for AI, which I think is one of the most seismic changes to the economic landscape that we've seen in decades, I don't think it's prohibitively expensive. It's fully priced, don't get me wrong. But I think given the growth rates, given how indispensable NVIDIA is to AI, given their competitive leadership position over all the other chip makers, I think that you can make a case that the NVIDIA valuation makes sense. And for many of the other mega cap stocks, they've had a very nice run year to date. If you step back, the vast majority of them are trading somewhere between 20 to 30 times earnings. And considering the amount of money they're pouring into future growth endeavors and the growth potential that they have, I think that they're reasonably valued.
And leaving the AI discussion to the side for a minute, if that's possible, I'll give you the floor. What other factors are you considering, challenges, tailwinds, whatever, within the current market environment?
Well, I'm a stock picker, but you can't ignore the macro landscape. I think that the surprise this year, positive surprise this year, has been the strength of the economy, and that's something that has been a very pleasant surprise for many investors. But you still have to to be a little cautious about what lies ahead. Investing is about discounting the future. And there's still, I believe, a lot of risk to the economy from the cumulative effects of the rate hikes that we've seen, yet to be fully felt, but I think could rear its ugly head over the coming months. So that's something to monitor. On the positive side, I would just speak to innovation broadly. One of the things that we're seeing is the powerful impacts of innovation in every corner of the economy is unlocking growth potential in individual companies that we think is underappreciated in the market. And that's what this portfolio, the BNY Mellon Innovators Fund, is trying to take advantage of.
All right, John Porter, thanks so much for your time. No animals this time in your background. We got to wait till next time. All right, thanks so much for joining us. We'll talk to you again soon.